Our top story first. Tamil Nadu is making a major pitch for new investments, and this time around, it's not merely the size of these investments, but where exactly it's coming from. Now, the big headline and the big takeaway is simply this. The state has netted nearly 67,000 crore rupees of investments at just one conclave today. In fact, that culminates after the TVK brought up 100 days of the new government in Tamil Nadu, with 97 companies signing MoUs with the state for investment commitments of just 67,452 crore rupees in one day alone, with the government projecting around 1.2 lakh jobs by way of these investments itself. That takes the total investment commitments since the new government took over to around 1 lakh crore rupees across 104 MoUs. Now, as the government points out, 25 of these companies are first-time investors in Tamil Nadu. What stands out is the changing composition of this investment pipeline. Some of these names indicate that Tamil Nadu is looking beyond auto and manufacturing investments and is increasingly positioning itself as a destination for high-value tech-intensive manufacturing. US-based Supermicrocomputer, for instance, is setting up server assembly operations in Chennai, while the Kaplan Group is investing 925 crore rupees in an integrated biologics and biosimilars R&D and manufacturing facility in Tiruvallur. Now, S3V Vascular Technologies is putting 525 crore rupees into cardiovascular, neurovascular implant manufacturing in Kanchipuram. This even as the aerospace push is equally significant, with Agnikul Cosmos investing 400 crore rupees in Thoothukudi for assembly and integration of its reusable liquid-propelled launch vehicles, with 1,500 jobs expected to be created. Skyroot Aerospace, meanwhile, is investing another 250 crore rupees for storage, assembly, integration and testing facilities, creating 500 jobs. Then there are the usual suspects in core manufacturing too. Daimler India Commercial Vehicles, for instance, 4,000 crore rupees to expand its 400-acre Oragadam facility for commercial vehicle design, R&D and manufacturing, while Lucas TVS is committing 2,500 crore rupees towards EV manufacturing facilities. Saint Gobain is investing 2,000 crore rupees across a new greenfield plant in Krishnagiri and an expansion in Kanchipuram, while Japan's YKK is putting 1,651 crore rupees in Tiruvallur, creating more than 4,300 jobs. Now, there's a clear employment-intensive component to this investment story as well. Taiwan's Baoyan India Shoe will establish its first India plant in Vellore with 240 crore rupees, creating 3,000 jobs and bringing manufacturing for international brands, including Geox. Sri Lanka's MAS Holdings, meanwhile, 880 crore rupees across Tamil Nadu, with 7,000 jobs expected. Now, investments by RB Wovens and the Pallava Group around the PM Mitra Mega Textile Park in Virudhunagar are also in the pipeline, together crossing about 1,675 crore rupees and expected to create 4,600 jobs. Now, there's a strong global investor footprint here. For instance, Germany's Bitzer is making its India debut in Kanchipuram with 300 crore rupees by way of investments, while Singapore's Ascenda's First Space is developing a 1,000 crore rupee industrial park in Tiruvallur, while Daimler, Saint Gobain, YKK and MAS Holdings are also expanding presence in the state. Now, the state's investment story clearly appears to be geographically diverse too, because Kanchipuram and Tiruvallur are two districts that are now emerging as industrial and advanced manufacturing hubs, while Krishnagiri is attracting EV and materials investments. Vellore is getting a major footwear project, Virudhunagar is benefiting from the textile push, and Thoothukudi is emerging as an important location for India's private space industry. The Tamil Nadu government's larger pitch, remember, is that it wants to build a $1.5 trillion economy by 2036. So to support that ambition, it says it has introduced a 21-day approval clock for licenses and MoUs to reduce bureaucratic delays. So the bigger takeaway from this investment is simply this. Tamil Nadu is trying to combine the two things that have traditionally driven its industrial economy: scale as well as manufacturing depth, with new focus on AI, aerospace, infrastructure, EVs, medtech, biotech, and advanced engineering. So the 67,000 crore rupee headline is certainly significant, but more importantly, the question now remains whether these MoUs translate into actual factories, capacity, exports, and jobs on the ground. Because for the state's next phase of growth, the real test will not be investment announcements, it will be how quickly these commitments turn into actual production. Meanwhile, the state's industries minister, the new one under the TVK government, Kirtana Sampath, spoke at the conclave on the slew of investments that are all set to take form and shape in the state. Let's listen into what the minister had to say.
Let me begin with a simple thought. Before you sign an MoU, you look at the numbers, evaluate the risk, compare us against other states, countries, and decide that Tamil Nadu is where you want to put your capital. We do not take that lightly. If you have trusted us with your capital, we have an obligation to make sure the capital moves quickly, productively, and predictably. Our Honorable Chief Minister has given us an ambitious target, a $1.5 trillion Tamil Nadu economy by 2036. It is a big number, but its impact is even larger. For a young graduate, growth means a better job. For a woman, it can mean economic independence. For an entrepreneur, it means the confidence to take a risk. For a family, it means upward mobility. And for a district like Ramanathapuram, which is receiving its first industrial investment today, it means that young person will not have to leave home to find opportunity.
And speaking of the Tamil Nadu Industries Minister, she was singled out for criticism yesterday for the manner in which she responded to a question over competing airport projects along the state's border with Karnataka and Andhra Pradesh. In fact, while responding to a member of the opposition in the Tamil Nadu Assembly over Karnataka's attempt to build a second airport for Bengaluru near Hosur and Andhra's efforts to build one in Kuppam, Kirtana alleged that the member was making these claims after reading news and social media reports. She then went on to demand evidence to substantiate claims about these airports being built and aggressively questioned the basis on which the projects were being discussed. Tamil Nadu, remember, has been in a long-standing competition with Karnataka over which state gets to build an airport near the interstate border, with Karnataka wanting to build one for South Bengaluru and the previous Tamil Nadu government, in fact, already kickstarting plans to build one in Hosur, not too far away. The minister, however, seems to be in denial on these reports till date. Here's what she had to say.
எதையுமே சமர்ப்பிக்க கூடாது. இதற்கான ஆதாரத்தோடு அவர்கள் சமர்ப்பிச்சாங்கன்னா நம்ம சொல்லலாம். பக்கத்துல இதற்கான ஆதாரங்களே இல்லையே. தகவல் எப்படி சொல்ல முடியும்? இதற்கான ஆதாரங்கள் இல்லாம இந்த மாதிரியான பத்திரிகையில வாசிக்கப்பட்டது, சோஷியல் மீடியால வாசிக்கப்பட்டதுன்னு தவறான செய்திகளை சட்டசபையில பேசக்கூடாது. இருங்க
Moving on, Bengaluru.
நம்ம சொல்லலாம்.
Moving on, Bengaluru-based electric mobility firm Yulu is stepping on the accelerator with its largest ever fundraise, securing $93 million in a Series C round led by GEF Capital. In fact, the company has raised $63 million in equity and another $30 million in debt, with the fresh capital all set to fund an aggressive expansion of its electric vehicle fleet. In fact, Yulu plans to quadruple its active fleet to about 2 lakh EVs over the next 2 years, even while expanding its service hubs and enterprise partnerships across India's rapidly growing quick commerce and the hyperlocal logistics ecosystem. In fact, the company says its revenue has grown 7-fold between FY23 and FY26, while it has remained EBITDA positive since April 2025, a significant shift for a sector where profitability has often taken a backseat to growth. In fact, Yulu is also expanding beyond its existing fleet with the launch of Yulu Express, a higher payload electric scooter designed for an e-commerce logistics operation, bike taxis and express parcel delivery. Now, while the company is now talking about public market readiness in the next few years, the big question is whether this latest capital infusion can in fact help Yulu scale rapidly while preserving its unit economics. We'll get you more on that, the growth opportunity in South India and the IPO roadmap with none other than Yulu's co-founder and CEO, Amit Gupta. Amit, welcome to South Central today and thank you so much for making time for us. My first question to you, you're calling this the largest fundraise in Yulu's history, but what changes operationally now for the company itself? You want to take the active fleet from its current level to 2 lakh EVs in 2 years. How much of the expansion will be concentrated in South Indian markets, particularly in Bengaluru and Hyderabad?
Yeah, So first of all, we are a pan-country operation, not just South India. We have large presence in Delhi NCR as well as Mumbai. So for us, all the big cities are our growth driving engine. And yes, you're right. Bangalore is our largest market. This is our headquarter. So yeah, South is very special to us as a company. Now, as far as this money is concerned, we have done really well. Yulu actually has been around for almost 9 years. And over last 9 years, we have built a very strong foundation, which involves a product that works, which has a very good life, very durable. We have built technology, we have partnerships in place, we have built infrastructure to service the customer, also a battery swapping network. And now we see the quick commerce market, the food delivery, the hyper local commerce in general, where people are expecting their product and services to happen in 15 to 30 minutes. And this is all done by gig workers who typically come from not so financially well off background. And as a result, they do not have vehicle of their own. So Yulu is filling this particular gap in the ecosystem where people who are looking for livelihood by becoming a service provider, we empower them by having this fleet, which is electric bike that runs very, very easy and trouble free. And this is what we do for a living. And as this market is growing exponentially higher, we believe that for us to set up a target which is ambitious and also doable at the same time is what led to this fundraise to happen at Yulu.
Right. Amit, I want to talk to you specifically about your strongest market, which of course is Bengaluru. So with Yulu already powering more than 15% of quick commerce deliveries across the top 4 metros in India, how much further can you grow in Bengaluru before issues like road space, charging infrastructure, and vehicle utilization actually become constraints for you?
Sure. So Yulu has fleet of almost 50,000 vehicles at the moment. Out of this 50,000, Bangalore has approximately 20 to 23,000 vehicles at the moment. If you look at Bangalore market itself, it has got, if I'm talking about all type of use cases, approximately 250 to 300,000 gig workers involved in the concept of quick commerce, food delivery, bike taxi, something like a porter. So we think that Bangalore itself can consume 50 to 60,000 vehicles very, very easily, like immediately. We don't have to do too much of work. And same volume, what we believe can happen in Delhi, Bombay, which are actually bigger than even Bangalore from a population perspective and economic activity perspective. So we see we have a big headroom. And why we are so bullish on our future and our expansion? Because today, after the crisis in the Middle East, the urgency towards going electric is far more higher. Uh, you have seen how, for example, Maharashtra, when they were looking at the bike taxi, they said the bike taxi has to be electric. The bike taxi also has to follow these norms. It has to have a GPS. It has to have this particular form factor, etc. And there's no personal vehicle which is two-wheeler which is complying with most of these norms. And if people really want to do bike taxi, then they can actually come to Yulu and ride one, become a rider on a Rapido or on an Uber platform. So we think, and same thing is happening in Delhi, by 2030, there are strong, strict targets on these commerce platform to go electric. So unit economics wise for the driver, if they use electric, they save more money. So which means more net income for them. It's a absolutely no-brainer financial decision. But now with the government's intervention positively and there's an urgency towards changing this fuel from fossil fuel to electric, we have actually an unprecedented tailwind in our favor, and we want to capitalize on that. And we believe that we're sitting on a technology, on a product backbone, which is highly scalable in nature. So for us, not only this be quadrupling the numbers over next 2 years, but we see things going beyond that. We see a very strong future for companies like us.
Right. Right. Speaking of scalability itself, Amit, let's take a look at what lies in store for you in Hyderabad. Again, a very strong e-commerce and quick commerce market. What are you seeing there in terms of demand, fleet utilization, and your enterprise partnerships? And can Hyderabad actually go about emerging as your second biggest growth engine in South India?
Very good question, and my Hyderabad teams believe so. They want to beat Bangalore. Actually, if you look at the statistics, Hyderabad actually has surprised most of the consumer economy. It was not very large market, but over last 4 to 5 years, everything, whatever happening around the modern technology, Hyderabad is now emerging a very large market. And we are seeing the same thing. So today we have a fleet of 4,000 vehicles in Hyderabad. And this is one market where we have the most bullish target for next 12 months. So we will take this 4,000 number to almost 25,000 numbers over next 12 months itself. So Hyderabad will have the highest rate of growth. So we believe that Hyderabad, from an economy perspective, is a strong one. Lot of industrialization, lot of jobs are being created, and what it does to that is a lot of people who come, they will have disposable income, they want convenience, and the economy of quick commerce, food commerce, all of this actually is flourishing over there. So it's a very, very good market. So today, our operations are limited to the new Hyderabad, which is Cyberabad area. And now, starting next quarter, we are growing into other parts of Hyderabad as well. So almost 8x, 7 to 8x growth over next 12 months is that's what we are looking at from Hyderabad. And Hyderabad, by the way, another interesting point is was the first city to get to the PAT positive state, which is like they generate very good amount of margin. So their operational efficiency is also very, very good, and the fact that they started the last from all the 4 cities where we run on our own, they were the last one to start, but they were
Right.
the fastest one to get the profitability.
And speaking of profitability and margins itself, you say you've been EBITDA positive since April last year, and that revenue has in fact grown sevenfold between FY23 and FY26. What are the factors that's powering this unit economics push from Yulu's side? What do you credit for that big transition and that shift?
Certainly. So the scale, to start with, we are actually a good beneficiary of this quick deliveries and quick services. So we are a great product market fit for anyone who is trying to deliver a good from a dark store. So that model, because our bikes, they are slow bikes, at least the first product. And for a 1 kilometer, 2 kilometer distance, we have got the best specification, which gives the best daily earning to the gig worker. That's why we are doing very, very well. So we basically were able to see a good growth because of quick commerce and quick services. Now, the second point is around the margin expansion. It actually has led by multiple things. First of all, the scale. So when we go start an operation in an area, so we have to set up customer touch point, which are created for certain scale. And as and when we are able to increase the density of user in the same pin code, we are able to get better out of the same infrastructure, which means my unit cost reduces significantly. Second big thing has happened from our improvements in the vehicle. So the vehicles which we are running are made by Bajaj. So
Right,
over last 3 years, they have been making continuous change. So our vehicles, by the way, are smart and
right,
connected. At a vehicle level, we know what component is failing at what life,
right.
and the same feedback goes to Bajaj. So our fault rate has gone significantly down over last 3 years, which again has given us a better unit economics. So these are the two major reasons
Absolutely.
for us.
Very interesting insights, Amit. But I have to ask you very quickly before we run out of time. You've raised 93 million, yes, and you're also talking about the possibility of a public market listing over the next few years. But in terms of that IPO itself, what are some of the milestones that you want to achieve before going about making a pitch for the public markets? What's on that checklist for you in terms of milestones before going public?
Certainly. So two important ones. One is we need to be PAT positive, because for a model like us, there's a depreciation of asset. So don't not EBITDA profitable is good, but not the most important. PAT positive is the most important thing. Second one, from a revenue scale perspective, we should hit 1,200 to 1,500 crores in our top line, generating enough and decent PAT from that. I think these two metrics and market leadership, growing market, expanding margin, operating margin, etc. These are some of the metrics we are looking at. We are very confident of hitting PAT positive state next year, and hopefully from a revenue perspective also should happen soon. So we believe that we are marching towards that milestone, and at the right time, we will be IPO ready, and decision to go to an IPO to the public market will be with the board, and hopefully we'll do that as well.
Right. Well, there's that journey that you will kick off, and 93 million is a great start to begin getting there. So on that note, Amit, thank you so much for joining us on South Central today and breaking down some of these insights. Yulu, no doubt they're well and truly on the fast lane. Thanks again for joining us.
Thank you very much.
And moving on to court action next, a significant ruling has come by way of the Kerala High Court, which has put a spotlight on the centre's powers under the FCRA. Now, the court has set aside the centre's decision to deny FCRA renewals to two NGOs from Kerala over allegations that they had in fact funded protests against the Virinjam seaport project. The court said that peaceful protest is a constitutionally protected right and cannot by itself be treated as a quote-unquote undesirable purpose under the FCRA. It also noted that there was no material establishing a direct financial link between the NGOs and the protesters. So the court stressed also that the executive powers or administrative disapproval of dissent cannot turn into a constitutionally protected activity and into a undesirable purpose. It has now directed the authorities to reconsider the NGO's FCRA renewable applications. Meanwhile, the Karnataka Bandh called for by multiple pro-Kannada activists today has gotten off to a damp squib. Life in Bengaluru remained largely normal with not much unrest. The Bandh was a virtual non-starter after multiple organizations that were in support of it eventually withdrew their endorsement of the statewide strike. The change of stance came after Chief Minister D.K. Shivkumar intervened and appealed that these organizations not go ahead with their Bandh. Here's Akshara with more details and take a look.
The Karnataka Bandh called by the pro-Kannada activist Votal Nagaraj has received a lukewarm response after the other two factions of the Kannada organization withdraw their call of the Karnataka Bandh. Now, the Chief Minister of Karnataka had requested Votal Nagaraj and the pro-Kannada activists not to go ahead with the Bandh, and today the Chief Minister stated that the Karnataka organization leaders have went and spoke to him and have withdrawn the call. So, but at the very same time, regarding the Kaveri issue, the Mekedatu issue as well, there have been protests at different parts of Karnataka, especially in the Mandya district, where the farmers of that region staged a protest against the government to ensure that they do not release Kaveri water to Tamil Nadu, at the very same time demanding the government to go ahead and expedite the Mekedatu project.
I'm very happy. All the Kannada activists, they all met me. They have withdrawn their Bandh call. And today is the first day of the assembly after I took over as the Chief Minister. I thank all the Kannada activists for helping us.
And with that, it's a wrap on South Central today. Thanks so much for watching, but we'll be back same time, same place tomorrow with more news and updates from South India. But for the moment, it's goodbye from us.